Hi, my name is Rhett Kessler. I'm the fund manager for the Pengana Australian Equities Fund, here to give a review of what has been a tumultuous month and a year to date. It's been a crazy month dominated by headlines about the coronavirus. Markets have not reacted well and have fallen precipitously and rapidly. The fund itself has been exceptionally well positioned. For some time now, I've been concerned, we at Pengana have been concerned about the irrational exuberance and the decoupling between underlying economic fundamentals and the ever higher share prices. And to refresh everyone, we took 3 important steps to moderate our exposure to what we saw as a likely undesirable event. The first was we built up significant firepower and taking a lot of equity risk off the table and converting it to cash. We sold significant amounts of big winners like CSL, ResMed, Credit Corp and Aristocrat. So a very comfortable cash pile or powder dry and waiting for opportunities of about 17% of the portfolio. Secondly, we also took out quite a bit of insurance. So we bought puts, which is a derivative that makes money if markets come down. You're limited to how much money you can lose by taking these puts, and you should liken it to an insurance policy. For a while, it felt like we were just tearing up money, and that was okay because the rest of the portfolio was doing well. And when the insurance was required, it worked exceptionally well. So to give an example, some of our puts went from a value of approximately 30 cents per contract to approximately $3 per contract. And that's really what you need when times get tough. Thirdly, we focused our portfolio on defensive toilet paper and toothpaste type companies. I'm going to talk about Telstra and Evolution Mining as good examples. Firstly, Telstra. It should come as no surprise to you that it is now the biggest position in our portfolio. We like Telstra for 2 reasons. Firstly, approximately 40 cents in the dollar is from their long-term government contracts, and we think it's like a government bond because they rent parts of their infrastructure to the NBN. Secondly, the demand for data has been growing strongly. We think it will grow even more strongly as people stop traveling as much and use a lot more data to have remote meetings, particularly video conferencing. They own the biggest data network in the country. Secondly, Evolution Mining. For us, we don't generally try to predict the price of gold, but we've managed to find a company that is what we think the cheapest gold factory in Australia. That means they make the most money per ounce of gold mined out of any other company in Australia. So we can be fairly price insensitive relating to the gold price. A lot of people have asked me, so what is actually causing this massive dislocation? There's a lot of fear in the market, and we think it is exaggerated by the amount of money that has flown into ETFs or exchange traded funds. For a long time, people have been telling us that we don't need to pay costs to fund managers because we can just buy the index. We've always likened that to it's kind of like buying a Mercedes-Benz and getting a cheap deal because they haven't spent any money on the brakes. That's our job as active fund managers. Our job is to determine, particularly in our fund, when risks are high and when stock prices or the evaluations of the stock prices have decoupled from underlying fundamentals. This has been one of those cases, and hence our 3-pillar strategy of having significant powder dry, lots of insurance through the puts, and a particular focus on defensive toilet paper and toothpaste type businesses has stood our customers in good stead with our focus on capital preservation. And we are very well prepared for a high period of volatility. We've been fascinated by the rapid turn from investors' focus on FOMO, fear of missing out, and TINA, there's no alternative to equities, to suddenly just fear. We've been able to buy some of our favorite companies at 20 to 25% discounts to what they were trading at the beginning of the month. We're not jumping in boots and all. We're using our bullets wisely, and we expect a very good outcome.